Hey everyone, I'm Jeremy Szafron. Welcome back to Kitco News. We got a great show ahead of us, so let's get started. The U.S. national debt has shattered another record, surpassing $36 trillion for the first time in history. That's an increase of more than $6 trillion since President Joe Biden took office. A staggering rise, it's been following an exponential trajectory. Now remember, just 40 years ago, the national debt was under $1 trillion. Yet despite this grim debt outlook, markets are defying expectations. The S&P 500 is up 23% year to date. Gold has surged at around 25%, and Bitcoin is leading the charge here, hitting new all-time highs above $90,000, more than doubling its value in 2024. Now, while many predicted a market crash, my next guest had a very different take. He forecasted a melt-up in asset prices, and he believes there's still more to come. According to him, the government simply can't afford a recession, leaving inflation as the only way forward. Now, he also says Bitcoin is witnessing not only a price rally, but a revolution. So joining us to break it all down is Mark Moss. Mark, of course, is the host of the Mark Moss Show, a seasoned Bitcoin macro-focused investor with over 25 years of experience. He's also a partner at the Bitcoin Opportunity Fund and the author of the Uncommunist Manifesto. Welcome to the show, Mark. Great to see you.
Yeah, thanks. Great to be here. I'm excited to dig into this stuff today.
Yeah, we got so much to dig into. Let's jump into it.
And
because as I mentioned,
I'm excited.
Yeah.
I'm excited because hearing you read that back, I remember like, oh yeah, I told you so. So let's dig into that.
Let's dig into that. There's a few moments here you can take a little bit of a victory lap because you were accurate. Before we get into that, the United States, as I mentioned, has hit a new historical milestone with the national debt exceeding $36 trillion for the first time. I mentioned that in the intro. Remarkably, this comes just a few months after crossing the $35 trillion mark back in the summer, underscoring the speed of this unprecedented climb. Meanwhile, the Federal Reserve has been shifting gears, already cutting interest rates by 75 basis points since September in an effort to manage economic pressures. So let's kick things off with diving into your macro outlook. I mean, the last time you joined us, as you said, the U.S. government simply can't afford a recession and that any potential crisis would likely be met with a wave of additional liquidity. So with this in mind, do you see a financial crisis looming here, Mark? And if so, what kind of a response are you expecting to see from the Fed?
It depends on what you consider a financial crisis. So what I've been calling for are, we have to understand the definition. So most people were expecting a crash. And so no shortage of people on Kitco and all across YouTube and other social media platforms calling for this crash. And Mark, don't you know the inverted yield curve? And don't you know all these indicators? And don't you know that the real numbers of unemployment? And yeah, I get all that. But if I think about what a crash is basically where in the past, typically what most people think of is like my stock portfolio goes down, my house value goes down, maybe I lose my job, I get a lower paying job, maybe my business doesn't do as good. And ultimately, my money goes down and I can't afford the same quality of life. That's what I would find the outcome of a crash being. And what I've said is that there's a reverse crash where prices go up so fast that I also can't afford the same quality of life. The outcome is the same. I can't afford the same quality of life, but instead of crashing down, it crashes up. And that's exactly what's happening. And the reason why I'm so confident in this, and if you go to my YouTube channel, in October of 2022, I made a video. There is no market crash coming. Here's why. In January of 23, all through January 23, in August of 2023, I made a video that said the bear market has been canceled. And the reason why is back to the debt levels. It's the fiscal train. It's, as my friend Lynn Alden says, that there's no stopping this train. And it's the amount of money that's being spent by the governments, and not just the U.S., but all the governments of the world. We know China is blowing their, what I call the monetary bazooka, even faster. And so it's the spending, it's the debt that will be continued to go up that's going. And I think what happens is most people don't really understand this mechanic. And the mechanic is that with prices, there's a nominator and a denominator. So how much is a barrel of oil? $70 US. And so we're measuring it in dollars. And so really what we're seeing is a bubble, not in the assets, but in the denominator. It's in the dollar. And so as that dollar, as the monetary base continues to expand, since 2019, it's been averaging an increase, the US, by 10% a year. And so that's what's pushing asset prices up. And if I look at them differently, and this is where most people get it wrong, in my opinion, is they're looking at the government reported number of CPI to to look at, the 5% in the bonds and it's 3% in stock in CPI. So I have a 2% positive carry. But that's the wrong number. The real rate of debasement, or the hurdle rate, is 10%. And when you start to understand that, then you realize, if I look at assets different, for example, the S&P 500, and I adjust it for M2, I adjust it for the money supply, you see we haven't made a new all-time high in the S&P 500 since the year 2000. If you look at home prices and you adjust it for M2, you start to see the world completely different. And so there's nothing that stops this train. The government's going to keep spending. They're going to continue to increase the debt at a faster and faster rate. And asset prices, I expect them to continue going up.
Yeah, well said. I mean, they're going at a very, very fast rate considering the 35 trillion. And, you've often said on your show that the real hurdle rate for investors isn't just inflation, it's the rate of monetary inflation, like you just mentioned, which you estimated to be around 15%. And according to you, the only two assets that consistently beat that hurdle rate have been Bitcoin and NASDAQ. Of course, since the U.S. election, Bitcoin surged more than 30%. It's on track for its best monthly performance in history. I think it's consolidating above $88,000. Even more remarkably, Bitcoin has overtaken silver to become the world's 8th largest asset, with a market cap now reaching $1.7 trillion, adding to the momentum. And we can keep going here, Mark, is BlackRock's spot Bitcoin ETFs. They've surpassed gold in size, and surpassed its gold fund in size when you look at the Bitcoin side. So, obviously there's a record demand here. You were posting on X just lately saying that, quote, a Trump landslide win has set the stage for a massive shift, with the U.S. and other major powers moving to stockpile Bitcoin. This isn't just a price rally, it's a revolution. So let's start with Bitcoin hitting new all-time highs above 90,000. You've been predicting a melt up in prices for a while. But did you expect to see this acceleration happen so quickly?
Well, I also posted a tweet that said, so now I started buying Bitcoin in 2015. So I've been through multiple of these cycles. And no matter how many times I've been through these cycles, and no matter how many videos I've made saying where I think the price is going, I still get caught off guard sometimes by how quick these candles move. We saw almost a $10,000 candle. It's amazing. So yeah, I guess I was caught off a little bit, even though I've been predicting it. But maybe it was the last time I was on Kitco, and I talked about coming into the election and how Bitcoin's going to do what Bitcoin's going to do regardless of who won the election. But there's a range of where we would expect the price to be. It could be 100,000 or 300,000. And I said, if Trump wins, we'll be at the top end of the range. If Kamala wins, we'll be at the bottom. And so here we are. Trump won, and we are rocketing to the upper band of that range right now. And I think, well, when I posted that like a week ago, I just don't think that the average person, even the average Bitcoin maximalist potentially, is underestimating the size of the move. The market has not been pricing this in. I think now, a week later, the market is starting to price that in. And basically what I'm talking about is sovereign FOMO. We saw Michael Saylor and MicroStrategy has sort of kicked off this institutional FOMO, if you will, but that takes a while to come in. It's starting to come in. It's gonna keep coming in, but now we're starting to see sovereign FOMO. So at the Bitcoin conference this year in July in Nashville, I spoke there on the main stage right before Trump. I was on the news desk reporting on RFK's talk, and both of them came with a pro-Bitcoin policy. And specifically, even RFK laid out a plan to put Bitcoin on the strategic reserve, to put Bitcoin on the balance sheet, and laid out a plan of how they want to accumulate and so forth. Obviously, RFK rolled into the Trump campaign, but both of them ran on this pro-Bitcoin platform. And then Senator Lummis from Wyoming has put in a bill into the House already to just do that, put it on the strategic Bitcoin reserve. And the plan is to add 200,000 Bitcoin per year to get to a point of 1 million Bitcoin on the books. Now, going back to this, I said, look, Trump is favored, 65% to win at the time. And if he wins, I think there's a very high probability that this will happen, that it'll go on the strategic reserve. And the reason why that's important to understand is but specifically in the world of business, and then even more in investing, hedge funds and institutional investors, competition is real. If a hedge fund were to adopt a strategy, let's say put Bitcoin in their strategy and outperform, then other ones would then sort of be forced to do the same thing. And when El Salvador started putting Bitcoin on their balance sheet several years ago, El Salvador is one of the poorest nations in the world. Nobody really paid attention to that. But now, several years later, they see what it's done to El Salvador. When Bitcoin hits 100,000, which we're probably a week or two away from, they'll be able to pay off the IMF. It's never been done before. It's an amazing feat. They've attracted so much investment capital that other small nations, Omar, Sudan, UAE, are paying attention, are doing the same thing. But here's the thing. If the US does this, now we're talking about influencing G7 nations, G20 nations. And that's exactly what's happening. And I think right now, because we've got a complete red sweep of the House, the Senate, the presidency, because the bill's already in place, most likely this goes through. Senator Lummis was saying she wants to get this done within 100 days of the presidency. And other nations are starting to pay attention to this. And I think they are starting to buy. And that's really putting a lot of pressure onto the price.
Yeah, wow. There's lots to break down there. I mean, as you mentioned it during the campaign, Trump called himself the Bitcoin president, right? And he's also kind of vowed to take down deregulation, make it more business friendly. He's also promised to replace Gary Gensler, the SEC chief, with somebody that's more crypto friendly. You mentioned it. Additionally, he wants to considering, at least the administration's considering the elimination on capital gains taxes within cryptocurrencies. So you mentioned most of the developments there, Mark, but with all of them happening so rapidly, how much further can this rally go?
Well, it depends on what time frame you want to talk about.
Right.
So Bitcoin moves in sort of 4-year cycles, and these 4-year cycles are global liquidity cycles. And they move on 4-year cycles. That happens to overlap with the election cycle and the Bitcoin halving cycle, the 4-year business ISM cycle. And so we typically see like 3 good years and 1 bad year. So let's say, where does Bitcoin get to the end of next year? And then maybe where does it get to by 2030? Yeah. So I think that now with Trump being president, I thought the range was somewhere between 1 to 300. And with Trump being president, I think we're at the top part of that range. Maybe we're in the 200 to 250 range. And I hate to say that publicly because it sounds so big, but at this rate of institutional now sovereign FOMO, I think that's a reality. I think by let's put this out in the public here. I think by 2030, I think $1 million Bitcoin is at play.
Wow, 1 million.
And the reason why I would say that is because if we know that asset prices are going up with the expansion of the monetary supply, the governments already tell us how much the monetary supply is going to expand by 2030. The CBO of the US puts that number out. Now, we know we're going to well exceed that number. We know that Bitcoin is typically moving on about a 9 times sensitivity. So for every 10% increase in global liquidity, Bitcoin's going up about 90%. It's just a math equation at this point. So I think we're at about 1 million. And then I think maybe in the next 6-7 years, we're at $2 to $3 million per Bitcoin.
Wow. Yeah. Wow.
And then it just keeps going from there.
Okay, well then, how high?
I'm happy to break that down for you. Let me give a quick breakdown.
Let's break down 2025 for sure.
Okay, so there's a lot of ways that we can back into this number. So we can look at the inflation number. Another way that we look at this is we say, okay, so right now, well, 2025. So we're talking end of next year. So that'll be the end of this 4-year cycle, and it's when the global liquidity cycle starts running out of liquidity before we get into the next tranche. So if we look at the previous cycles, we can see how Bitcoin goes up and down. And so, like I said, we get this range. And so if you want to look at it from like a Metcalfe's law, so like Jerry and Timmer from Fidelity sort of uses this model. There's like a power law model. There's a stock to flow model. There's lots of different indicators that we can look at. But like I said, that range is in that $1 to $300,000 range. And the reason why I'm choosing the top end of that range, the last one got a little bit muted. And part of that's because that's right when the Fed started to raise rates. And I think it got a little bit muted. But what I would expect on this next one is to be on the high end because of now, like I said, with the Trump presidency, to the point that you made, him being the Bitcoin president, the amount of institutional FOMO, as well as the record acceleration of debt. Now, and it's not just that. I believe that Trump is going to be the Trump administration and the policy and the DOGE, efficiency part of the government. I believe that the economy is going to be unleashed. I expect for the economy to take off, and that's also going to be inflationary. It's not going to be good. I expect a lot more inflation through next year. And so when you add all of those things in, I believe we're at the high end, and that's where we get to about a $300,000 number.
Wow. Okay. So then in the short term, going towards the end of the year, I mean, are you still calling 100,000? Should we be buying these dips, or should we be waiting for, more of a haircut?
Well, I like to say that if anybody's looking at their portfolio on a monthly or 6-month basis, you're just never going to make it.
Right.
I'm currently building a house in Mexico. Thanksgiving will be my first weekend there. I'm so excited. And I've been building that for 4 years, like 4 years. Like who's looking at an asset in monthly? Like who cares where it's at at the end of the year? But what I would say is, should we buy the dip or should we buy right now 100%? And rather than me tell you that, let's just look at the actions of Michael Saylor. Mm-hmm. They just bought $2 billion worth of Bitcoin at $80,000. They're not waiting for a dip, and neither should you.
Well said. Okay, well, we also need to discuss what you just mentioned, Republican Senator Cynthia Lummis of Wyoming and her proposed legislation, the Bitcoin Act, short for boosting innovation, technology, and competitiveness through optimized investments nationwide. Now, Lummis was a close ally of President Trump and has outlined an ambitious plan to sell some of the Federal Reserve's gold to fund a strategic Bitcoin reserve. Now, her bill, which she's preparing to introduce in the new Congress next year, would call for the federal government to purchase 1 million Bitcoin, about 5% of the total supply, at an estimated cost of $90 billion at current market prices. Lummis first unveiled this idea at the Bitcoin 2024 conference where you spoke at, where she described it as a long-term strategy to reduce the nation's debt. Now, unlike Trump's initial proposal, which focused on the 200,000 Bitcoin already seized by the government, her plan is to significantly expand the scope. Can you elaborate on this? I mean, could selling certificates representing the Fed's gold to buy Bitcoin work, and what impact would that have on the price?
Yeah, it could certainly work for sure. There's a bunch of ways we can get there, but let's talk about the impact on the price. So per the plan, they want to add 200,000 Bitcoin per year to over 5 years to get to 1 million Bitcoin. Now, let's just do some basic math here. So what happens with Bitcoin is, unlike other assets, I mean, it's a commodity, all right? And commodities are different than equities. So equities, we value them based off of cash flow and assets and PE ratios and things like that. But with commodities, it's very simple, supply and demand. Right. Whether it's gold, uranium, or copper, it's just supply and demand. Now, understanding demand in an oil market is very difficult, but understanding demand in Bitcoin is much simpler. Number one, the supply is fixed. So if gold explodes to 10,000 an ounce, more people go mine gold, more gold comes into the ecosystem, so there's more inflation. But with Bitcoin, if Bitcoin goes to 10 million, more people go mine, but it doesn't bring more Bitcoin out. So Bitcoin has a fixed supply issuance. We'll cap at 21 million. Currently, right now, there's about 328,000 Bitcoin per year being created through mining. And no amount of increased mining effort will bring more of that. That's it. That's fixed. So then we look at what's the demand of that. Well, you add in the U.S. government wants to buy 200,000 a year. So there's only 328,000. They want to buy 200. Now back to Michael Saylor. MicroStrategy has also committed to, I believe, 42 billion over the next 3 years. Now at current prices, that's about 175,000 Bitcoin a year. So just two buyers right there have committed to buy more Bitcoin than is currently being produced over the next 3 to 5 years. Now, what's also interesting to understand about this is if it was a hedge fund or, some Wall Street institution, something like that, they're traders and they're going to trade around the price and they'll try to get it at the right time, buy the dip, so to speak. But what MicroStrategy has proven to us is they don't do that. They just buy on a consistent basis. They're not price sensitive. And Michael Saylor said, I'll buy at 1 million. He said, I'll buy every top, 2 million, whatever. And the government is also the same way. They're not traders. They're not price sensitive. And so what that means is that we'll have a strong, steady demand over the next 3 to 5 years, more demand than is being created. And that's just from two buyers. That doesn't include the Wall Street ETFs that you talked about that are the best performing ETFs in history. That doesn't include other institutional FOMO that we have and family offices and sovereigns coming in. And so we are going to have, that's the math. We're going to have a massive amount of pressure on a fixed supply asset.
Yeah, interesting. Okay, well, I want to get your take on selling gold for Bitcoin because, Lummis suggests funding this idea without adding to the federal deficit by tapping into the Federal Reserve's gold certificates. And while the Fed holds gold certificates valued at $11 billion based on an outdated statutory price of $42.22 an ounce, the actual market value of this gold is nearly $675 billion. And, this valuation, according to her, could more than cover the cost of this proposed Bitcoin reserve. So it's worth noting, the Federal Reserve doesn't actually own gold under the gold Reserve Act of 1934, the U.S. Treasury owns the gold, while the Fed holds certificate denominations in dollars at the fixed old statutory price we just talked about. Finally, let's talk about the global implications here, Mark. I mean, you just said if the U.S. adopts a Bitcoin strategic reserves, it could trigger a game theory scenario where other countries rush to stockpile Bitcoin similar to how they treated gold. You've even posted that this could push Bitcoin up to 400,000 in the years, up to 5 million, as you just mentioned. So expand on this theory here.
Yeah. Well, first thing I would say is about selling the gold or the gold certificates. I would say if the U.S. wants to play whatever chess or 5D chess or whatever you want to call it and wants to commit and go all in, then maybe. Otherwise, I think probably they're not going to do that. And so I think getting rid of the gold is probably a bad idea. And the reason why is we know that there's also massive, maybe even sovereign FOMO, or at least massive sovereign demand for gold right now.
Right.
China is pushing the price of gold up by, converting their currency in gold. We see a lot of the BRICS nations, if you will, recycling their surpluses into gold, and that's putting a lot of upward pressure on gold. And I think there's a point coming up, not too far out, where the U.S. is going to have to do something drastic in order to keep its currency strong, and that could be either letting gold get revalued up to some market value, maybe that's 10,000 an ounce or 20,000 an ounce, or moving to like a Bitcoin standard. Something has to happen in order to shore up the currency. Otherwise, China's going to do it. And this is the game theory again. China seems to be angling for this. Most gold analysts will tell you this. They seem to be angling to somehow back some of their currency with gold. And if that happens and the U.S. doesn't, it's going to pull all the demand over to the Chinese currency or whatever this gold situation that they set up. And so the U.S. has a tough decision. Do we allow China to do that and take all of our steam, this game theory, if you will, or do we preempt them with some move on our own? And I believe that day is coming in the next couple of years. And so do we do that with gold, or are we 5D? Do we go all in and we do that with Bitcoin? I don't think they're going to do it with Bitcoin. So I think probably getting rid of the gold would be a bad idea. I don't think we need to do, I think we can do both. I think we can build up the strategic Bitcoin reserve to match the gold price and even more, and still hold on to the gold that we have at the same time.
Okay, so you think we could do both. You mentioned, other countries. Which countries do you think are the most likely to follow the U.S.'s lead if in fact this Bitcoin strategic reserve goes ahead?
I mean, I think every nation. I think the G7 is going to have to do it. I mean, we already know that, currently right now, the U.S. Treasury market is the bedrock of the global financial system, right? So it's not really the U.S. dollar, it's the U.S. Treasury. And we also know that to the point that we're talking about here, the government debt has exceeded 36 trillion. We know that they're going to continue to blow that debt up at a faster and faster rate. And the rest of the world does too. Everybody understands this. And so I think at this point, everybody, the other nations, are starting to wonder what's next, which is why the BRICS and China are starting to recycle into gold. Obviously, Russia's trying to figure something out. So everybody's trying to kind of set themselves up for what's next. And so, if the U.S. does this, I think the G7. And if the G7, then the G20, and then every other nation from there. Now, there are nations like Canada who don't own any gold, and maybe Canada will continue to just sit this one out. But most countries that are serious and are paying attention are going to be forced to do it.
Yeah, I mean, you mentioned it. We've all year been hearing about China accumulating gold within their reserve. And, some months they go, okay, we stopped doing it, and there's a little bit of price action. Do you believe that there's already sovereign states accumulating Bitcoin very quietly here?
Oh, for sure there are. There has to be. I mean, I have quite a big reach, and I hear a lot of rumbling of small different countries doing it. But you see these big purchases going down. Somebody's buying in bulk. I do know that there are, like I mentioned earlier, smaller nations that are already doing it for sure. They're already setting up Bitcoin mining facilities and things like that. So for sure, some of the smaller nations. I just haven't really heard of any of the G20 or G7 nations doing that. But I believe that's what the U.S. will influence them to do.
Yeah, interesting. So do you think that, El Salvador, for instance, being one of the first, this is a trend that's going to continue?
Yeah, of course, because everybody can see the benefit to that. Like I said, I mean, El Salvador is now in a situation to pay off their IMF debt. That's unprecedented. It's never been done. And not only that, it's the amount of growth. It's the amount of investment capital. It's the prosperity that's come to El Salvador because of this. And so, I mean, if you're another country and you're watching this go down, like, of course, you're going to want to do that. Now, we're seeing, history sort of play out again side by side. So next door, you have Nicaragua, that's gone completely communist. And so we'll see how this plays out side by side. It's almost like a East and West Berlin, so to speak, back in in the old German Republic before, well, it was still under communism. But I think, I mean, again, if you're serious about building wealth in your country, and you see somebody adopt this policy and have massive success because of that, like, why wouldn't you do that? Back to the game theory.
Yeah. I mean, you mentioned it recently. Billionaire venture capitalist Tim Draper made headlines with his bold prediction, like you talked about. When Bitcoin hits 100,000, El Salvador will have the ability to pay off all of its debt from the IMF. This would be unprecedented in global finance. So break this down for us, Mark. I mean, why would such a move be so historic, and what ripple effects could this have for other emerging markets?
Yeah, I mean, this is a much bigger topic. There was a book written called The Confessions of an Economic Hitman. And they talk about how the IMF really indebts these nations and puts them into permanent slavery. And so they issue them loans that have no chance of ever being paid back. And because we're in a debt-based monetary system, and so if you understand that all money is created through debt issuance, and because of that, it's basically a Ponzi scheme. The debt can never be repaid. The debt has to be rolled over with more debt. That's when you heard Biden on the news last year talking about the debt ceiling debate, and he said, the U.S. has never defaulted on its debt. That's why we need more debt to pay off the old debt. And so what happens is when these nations are struggling with debt, the IMF will give them more debt and then restructure it so they can keep paying it back because that debt can't be extinguished. It can't be destroyed. And so that's sort of how the model is set up. And so we don't see these nations getting out of it right now. I believe the two largest debtors to the IMF are Argentina and Egypt, I believe. And you just don't see them coming out of it. And so for a small country, a poor country like El Salvador, which doesn't really have any exports or any type of natural resources, to be able to get its way out of this just by changing its money, changing its store of value, then attracting a massive amount of investment capital to be able to pull itself out of that. I mean, other nations are paying attention to this. Now, then we can get into the politics of each individual nation. But imagine like Argentina, who has the president there, Milei, or however you pronounce his name, Javier Milei. And I mean, he's certainly watching this for sure. We see that he's over here meeting with Trump right now. I'm sure they're talking about a Bitcoin strategic reserve. These are the types of nations that are going to be influenced in this very heavily.
Yeah. Okay. Well, considering everything you told us today, especially the idea of revaluing gold potentially, and then the Bitcoin reserve, paint a picture for our viewers about the Bitcoin revolution you're talking about. I mean, how do you see this playing out this decade?
Yeah. So I have a fund, Bitcoin Opportunity Fund. We're a venture fund, and the way a venture capitalist puts value to something is that we say, hey, if I'm looking at Uber, how much would Uber be worth? Well, what markets am I disrupting? And how much are those, the addressable market? How big is that market? And what do I think is a percentage that's reasonable for us to acquire from that? So Uber or Airbnb, something like that. And so Bitcoin isn't competing against PayPal or Visa. It's competing against store of value assets. So this is the bond market, the equity market, offshore bank accounts, real estate, things like that. Equities, cash. And so we have about $900 trillion of store of value assets. Now, what do we think is a realistic percentage of Bitcoin to be able to disrupt from that? Now, 5% seems pretty reasonable. Is that reasonable? Let's check the math. We know that Uber and Airbnb both took 5% of their market share in less than a decade. We know that Paul Tudor Jones, legend, is saying that you should have at least a 5% allocation. There was a big fund over in Europe a couple weeks ago, just announced a multi-billion-dollar fund. They're putting 3% allocation. So 5% isn't unreasonable to get to. Now, 5% of 900 trillion is about 45 trillion divided by 21 million Bitcoin gets us to $2 to $3 million per Bitcoin. So that's sort of the back of the napkin math. I think we get there in a couple of years. But why is this really a revolution? I want to talk about this for a second because we've talked a lot about the price, and I love the price. Number go up. That's what we call it, up and to the right. But it's way bigger than that. And here's why. The current financial system that we have today is archaic in many ways. For example, there's no way for me to send 35 cents to somebody somewhere else in the world. For example. And so in today's day and age, we need a way to do micropayments. The current financial system that we have today is what's called permissioned, meaning I have to have permission to join it. If I happen to be born in the wrong country, I'm a 14-year-old kid, but no bank account for you. We have about 1.5 billion adults in the world, adults who don't have access to banking. Even nations in El Salvador, or people in El Salvador who are able to get into the banking system, a lot of them can't even afford it. So it's, whatever, $25 to get a bank account. But when you make $100 a month, you can't afford that. So no bank account. If I'm a merchant, you have to do a certain amount of transactions to get a merchant account, and they don't do that. So no merchant account. And so all of these people are unbanked because of this. We have people that are fleeing nations, right? Whether they're leaving the Middle East or Syria or whatever nation they're leaving from, and maybe they don't have any ID anymore, no bank account for them. And so we have all these people, billions of people now, who are not in the global financial system. They're providing no value to the world. Now we have Bitcoin, which is open, borderless, but it's also permissionless. So anybody can download a wallet and get into the financial system immediately. Mm-hmm. Now, from America or a Western nation, you might go, what's the big deal? But if you're in North Korea, where you're not allowed to save money, where the military regularly goes through your house to make sure you're not stashing cash, and then what happened is people stashed cash for generations and stockpiled it, and then they just changed the currency, wiped them out. If you're in Afghanistan where the Taliban took over the central bank and I can't send money there to a woman that I may know to help her because the Taliban will take it, when you're in one of those countries, you care about these things. And so to be able to bring billions of people into the global financial system without permission, be able to send money to these people to help them out, and more importantly, to bring these billions of people into creating new ideas, inventing new things, solving bigger problems. I mean, we are about to witness a period of prosperity that the world has never seen. I'm calling it the Renaissance 2.0. If you go back to the previous Renaissance after the Dark Ages, two things happened that created the largest era of prosperity the world's ever seen. One, we had new technology, and it was the printing press. And the printing press was an explosion of information. Now we could share information faster and further than we were ever to before. But number two was we had the florin, which was the longest lasting gold coin in history, 400 years without being debased. So when we have an explosion of information, like the internet, and now we have a global borderless hard asset that can't be debased like Bitcoin, I believe we'll see a period of explosion, a Renaissance 2.0, bigger than we've ever seen before. And that's why it's a revolution.
Interesting. Generational wealth, I guess. Okay, listen, you said one thing to watch in the near term is this sovereign FOMO, the fear of missing out, with some potential countries buying under the radar. Considering the geopolitical fragmentation we're seeing around the world, let's talk about the big U.S. competitors. I mean, who can beat the U.S. to the punch here, and why is that a threat to the dollar?
Yeah. So, we talked about already with China potentially angling to have some sort of a gold-backed currency. And if they did that, there would be a lot of confidence in that currency, and that would pull away from the dollar. Mm-hmm. And so that's kind of, I guess, basically what it is. That's the game theory in place. Now, in regards to Bitcoin, maybe some nations beating it to its punch. We know that both China and Russia, Russia's been kicked out of the global financial system. What are they supposed to do? Just go die? No, they'll figure out another system, obviously. And so there's a lot of stuff coming out of Russia. I don't know how much we can believe, but where Bitcoin has been legalized, and maybe they're already starting to acquire Bitcoin. They're starting to use Bitcoin. Some of the BRICS nations, I'm sure, are doing the same thing. They're all trying to find a new currency. And this is actually, if you want to look from a little bit of a bigger lens, is where it gets really interesting, because what we have is the world is breaking apart. Since the 1940s, after World War II, the world got much more centralized with the UN and the IMF and the BIS. The world has become much more centralized. And currently now the pendulum is swinging back the other way, and we're starting to decentralize, multipolar. And so now Russia's over here and China's over here and the BRICS are over here, the US is over here. And what's happening right now is they're all trying to figure out, how are we going to do global trade in this era where we don't have a global currency like the US dollar? Each country is now trying to manipulate their own currency. The BRICS are trying to say they're going to start their own currency, which I think is a nothing. It's probably never going to happen. None of those nations will ever trust each other. And ultimately, what the world is going to inevitably fall on is there needs to be what was intended in the Bretton Woods Agreement, a neutral reserve asset. That's what we have to have. We need a neutral reserve asset that nobody can control, that nobody can manipulate, and everyone could agree to that. That used to be gold. Gold doesn't work in the information age. So we need a neutral reserve asset that works, that's compatible with the information age that we're in. And the only option for that, the only option is Bitcoin. And I believe that's where we'll eventually settle.
Yeah, let's talk about how Bitcoin's rise is reshaping personal wealth, because with the cost of living skyrocketing, the actual median price of a new U.S. home in Bitcoin has dropped dramatically. Here's a staggering statistic. In 2012, the median new home price in the U.S. was 50,616 Bitcoin. Fast forward to today, five Bitcoin. It's a hard shift to grasp. So, what are your thoughts on this interplay between real estate and Bitcoin holdings here?
Yeah, I think it's really fascinating. And I've said this, not to be callous, but while the whole world is dealing with inflation and life is getting more challenging, it's getting more difficult because prices are going up so fast, faster than the rate that their wages are going up. And not to be callous, but I said everything's getting cheaper for me because I start measuring everything in Bitcoin. And it really goes back to that bigger topic we started with, where I said, if you start to understand that it's the denominator, the dollar, that's that one that's inflating, and you start to value prices differently, you start to understand that, sure, the US median home is whatever, $500,000, but it's also whatever, I don't know, 1,500 barrels of oil, and it's also, 1,000 ounces of gold, and it's also 5 Bitcoin. Everything is measured in different things. And when you start to understand that, you go, well, I can personally change my unit of account. I can personally start to use Bitcoin as my unit of account. Now, we know that since for the last 4 years, Bitcoin is doing about 55% a year. So if I say, hey, I'm going to price things in Bitcoin, and because it's going up by 55% a year, then any investment that I make needs to beat that. That's my new hurdle rate. If you start to do that, then the whole world starts to become much more simple. Well, shoot. So you're saying that I could just put my money in Bitcoin, it goes up by 55% a year, life gets cheaper for me, and then I can focus on my zone of genius. I can be the best brain surgeon, the best attorney, the best doctor, whatever it is, and then I can change the world, I can bring value, I can make a lot of money, and then I just save it over here in this asset. And so that's this correlation that we're seeing. Now, of course, you need to have a little bit of a long-term perspective because Bitcoin is volatile. It is going up and down. I wouldn't recommend putting your rent money in there for next month or your grocery money. But if you have money that you can set aside for a couple of years, then you'll see that number go up. Now, one more thing I'll add to this that's important is that back to these billions of people around the world, 75% of the people in the world today live on less than $10 a day. Now, these people don't have enough money to buy property. They can't buy the house, the building, the business, whatever. But now Bitcoin gives billions of people a way to own property. They can buy $1 worth. They can buy $5 worth. And it gives everybody a way to now own digital property. So whether you're in America or any other country, you can get into this revolution.
Yeah, you recently posted a video on your channel, The Mark Moss Show, which is great, by the way. Everyone should be watching that. You were discussing, building wealth in 2025 by saving rare assets. So share with our audience the takeaways from that video. How should people approach their investments going forward into next year, aside from holding Bitcoin?
Yeah. So I talk about rare assets or scarce assets. Scarce, rare is about the same thing. Right. And so what we know is that scarce assets, because of supply and demand, scarce assets go up more. And so really I think of assets in 3 different categories. And this is sort of how I divide my wealth. Number one are these scarce or rare assets. So that might be beachfront property or lakefront property or a downtown city block. It could also be a Mona Lisa or a rare car or something like that. Right. Then we would have the second asset class would be like energy intensive assets. So these would be things that require tons of energy to produce. So these would be like commodities, right? So to get gold or lithium or nickel out of the ground, there's a lot of energy that's required. And so it's really hard to sort of debase those things. And then we have assets that are neither scarce nor energy intensive, like equities, for example. And those are much more manipulative. So when I think about the scarce assets, to give you sort of an example, let's just take US median real estate. So we know that over the last 5 years or so, the US median real estate went up about 40%. We know the money supply went up by about 40%. So real estate is keeping up. It's like a perfect proxy for like the debt. However, Austin, Texas has been one of the best performing markets in the United States for 20 years, and real estate went up a little bit more, about 45%. However, there's a lake in Austin called Lake Travis, and there's only so many homes around the lake, and those lakefront homes went up about 150 to 200% in the same time frame. And you're starting to see this all over the world. I said earlier that I'm building this house on the beach down in Mexico. Mm-hmm. And I've been going all over Mexico, mainland Mexico, Baja, California, Mexico. And what I'm seeing, I live on the beach here in Southern California. What I'm seeing is all the beachfront property is all being bought up And the homes are about the same price as they are here on the beach in Southern California. Now you get way bigger houses, but what we're seeing is all over the world, the wealthy people understand this and they're going to buy as much scarce assets as they can. Now, most people can't go buy lakefront property or downtown city blocks. And so they're like, well, Mark, cool. Sounds you're really rich. What about me? But this is where Bitcoin comes in. So that's what I think. So I like to think about those. I typically like to think about businesses. What's my zone of genius? What businesses are in? What is my knowledge? Sort of like a Warren Buffett deal box. So investing into businesses that I understand, and I know. Then I think about the scarce assets. So these would be Bitcoin, of course, but other commodities, gold, maybe some producers, some gold miners, maybe some other commodities. Uranium seems to be hot. Nuclear is the only way out of this right now. So right. We just saw the numbers of the wind and solar out of Germany right now. It's just devastating for them. Like there's just no way back except for nuclear for them.
Wrong call.
So assets like that. And then I like real estate, but specifically for me, it's been trophy properties. So I have this ranch property that's very unique outside of Austin, Texas, and I have these beaches. So trophy properties. And for people that don't have a lot of money, there's now funds that are being set up where like one of my buddies runs a funds and he does like boutique hotels, and there's some that do like wellness retreats. And so you could get into these fractional. You don't have to have a lot of money to get access to these types of things. But what we're seeing is they're way overproducing. And then finally, something I talk about quite a bit and we haven't dug into at all is that about every 50 years, we have a technological revolution. And during this technological revolution, two different things happen. One, the technology changes the course of humanity. But more importantly for us as investors, it's the only place to invest. It's like this investing black hole, as I call it. So for the last 50 years, the only place to really outperform the market was microprocessors, telecommunication, personal computers, and the internet, right? That's it. The 50 years before that, it was like Ford, GM, GE. 50 years before that, it was like oil and it was steel. And right now, we just entered what I'm calling the sixth technological revolution. And this is really what I'm calling the decentralized revolution. And this is where Bitcoin and decentralized architecture and AI, robotics, and all come together to create this new world, this new set of building blocks we don't have. And it's the only place to invest. You mentioned earlier how I said the only thing that's beat the hurdle rate has been Bitcoin and the NASDAQ, tech stocks. Yeah. So crypto and NASDAQ. And that's where we're going to invest. So I'd also throw that in.
Yeah. Okay. Well, the Mag 7, I mean, are they over evaluated, or is this just getting started by, in terms of what we're going to see in their numbers? Because there's some people arguing, okay, it's been the top and we should start to look at picks and shovels as alternative investments.
It depends on what you're looking for. So one, I don't anticipate a big crash in any of those Mag 7 or markets at all. And that's because of the denominator. I expect the denominator to keep going up and it's going to keep pushing those asset prices higher. As far as continuing to outperform the market, sure, you're always going to get better performance in more volatile stocks like, smaller asset stocks, for example. But I think the Mag 7, yes, they're going to continue going up. One interesting thing, a lot of times we talk about growing our way out of this debt situation. And really what we need to grow our way out of this debt is some massive efficiency miracle and like cheap, abundant energy. Yeah. And I think a new Trump campaign administration that's very pro-energy, potentially, hopefully, having nuclear coming back and getting this cheap, abundant energy. Then you add in this new wave of decentralization and AI. And then you talk about some of the efficiency stuff, but just the technology and the energy alone, I believe that let's just say, I'm sure you already are. If you're not, you should be. I'm sure you are. Most people probably listening to this are using some of this new AI in their business, the large language models, ChatGPT or Gemini or Cloud. And already for my business, the amount of efficiency that we've gained, the amount of increased output that we're able to do with this is enormous. It's certainly 20% more, at least, if not more. So imagine if these the Mag 7, if you will, these publicly traded companies were to have an efficiency gain of just 2 or 3%, right? Times a 20 times PE ratio. What does that do to the market cap?
Okay, well, I got to get to gold. Obviously, here at Kitco, we love to talk about it. It's been quite the year, as I mentioned. It's been almost every time I come to work, I'm talking about the all-time prices. Of course, we saw a little sell-off after the election. I want to get your gold outlook for 2025, particularly as it competes with Bitcoin for investors seeking that hedge.
Yeah, well, I will say that after the 2008 great financial crash, that's when I was a real estate investor. I had built up a couple high tech businesses and some exits. But I wasn't really paying attention to the overall macro landscape. And after 2008, it was like a slap in the face. And I'm like, oh, shoot, what is this financial system? I have to figure it out. And I learned about fiat system, and I learned about the Fed, and I became a gold bug. And I realized that it was sound money, and it was this endless money printing, this debasement that was the problem. So I've been a gold bug. So I've been a gold bug for a long time. That being said, I now consider myself more of a sound money advocate. Okay. Gold was the mechanism. Now we have another thing. But I pay a lot of attention to gold. I own gold. What are my thoughts on gold? I think currently right now, like I said, China is really starting to push the price of gold. We understand, as I already said, like the BRICS nations are recycling a lot of their surpluses into gold. And so there's this there's this massive institutional, or I should say sovereign demand for gold. And I think that continues. And obviously we're seeing it in the price. Gold also sort of gives us this indicator of where they think the economy and where inflation is going. And so, it's lagged for a long time. I mean, it made it, what did it hit a new high or almost a new high in 2020, and then it kind of fell off for a couple of years. But now it's roaring back. That being said, it's hard for me to get excited over a couple $100 increase when Bitcoin's moving $10,000 in a day. Yeah, so I do believe that gold has the Lindy effect. It's been around. It's been money for 5,000 years. It's not going away overnight. I believe it's sort of probably the next step. I don't believe that sovereign institution, a Bitcoin future is in the near future. I think it's a couple of decades away. I think that I think that gold is this next interim step. As I kind of said, I think within the next couple of years, the US government will be forced to sort of make some action to preempt what China's doing. And I think that involves gold. So I'm a gold bull. I do believe that gold is strong. The sovereign demand for gold is strong. China's pushing the envelope. The BRICS is pushing the envelope, and the US is going to be forced to react. I wouldn't be surprised to see, gold hitting $5,000 in the next couple of years as the debasement continues. I think it is that interim step. And I do think there's an outside chance. I'm not putting a big prediction on this, but I do think there's an outside chance where we see gold being forced to be revalued much higher. And maybe it pops to that $10,000 or $20,000 an ounce. And I think that's sort of that outlier that we're sort of waiting for.
What do you think that looks like in terms of timing? I mean, I would keep hearing about it too, but it's such a topic. I mean, how quick will that price move if we revalue gold?
Yeah, well, if we did that, it would happen right away. Now, and there's tons of historical precedents for this. This is not some crazy thing. We've seen gold revalued multiple times. I mean, England did it. I mean, the U.S. did it in 1933 when they, Article 6102, when they seized all the gold, they revalued it. And so we see this happen many times. And so when it happened previously in the United States, the banks closed down for a week, the bank holiday, they opened back up, and they just revalued the price of gold. And so this could happen right away. When would it happen? I mean, that's I don't have a crystal ball. It's very fuzzy, unfortunately. I think it really depends on how hard the envelope gets pushed. So obviously, the United States would not want to do this. No country would want to do this. We'd only do it sort of being forced into it, trying to preempt a move. And so I think a lot of it's going to depend on how China gets out of its current debt situation that they're in. As I mentioned earlier, they have this like monetary bazooka that they're shooting because they have a massive debt problem. And so, they're trying to deal with that right now. If they can shore that up, maybe then they could work to sort of have a little bit more gold backing, or that could maybe be in the short term. Otherwise, it could be within the next 3 to 5 years if I had to put a number on it.
Yeah. It's so interesting because, you jump into it, and if they were to revalue that gold, I mean, how do they come up with the formula here? What's the math? I mean, is that going to take gold to 10,000, 20,000?
It would depend on how much they want to back it by, right? So you basically have, okay, let's go with a 20% backing or a 50% backing or whatever that number would be. My guess, it would be pretty low, right? They don't want to go with 100% backing for sure. I think, and then it would also depend on what they're trying to do to manage the debt, right? So basically, as the debt continues to expand, we get further and further out of this debt to GDP ratio, and then the confidence in the dollar continues to diminish, which is then this feedback loop that we have to rack up even more debt, right, with less people buying our debt. And so what they would probably want to do is then revalue gold to bring the valuation up, and be able to take some of that gold and put it into the treasury to sort of bring that debt to GDP level down a little bit. By doing that, it instills the confidence back in the US dollar, which then means maybe more nations are starting to buy our debt again, which then sort of reverses that whole thing. So I think these are the sort of mechanisms that we're looking for to see when that would happen. I think it's bound to happen. I do think that most people talking about the death of the dollar, while they're probably right, the Rickards of the world and the Peter Schiffs of the world, while they're right directionally, it's not imminent. And I think things can go on a lot longer than most people expect. So, for example, the dollar took over the reserve standard of the world from the pound sterling over 100 years ago. But yet the pound sterling is still the third most used currency in the world today, and they don't even have any exports. And so, and when it took over, that was about a 30 to 40 year period. So these things can take a long time. I would imagine the U.S. debt gets up to $100 trillion before we get into any big problem. So it's going to be a while.
100 trillion. Well, I certainly hope that's the top, man. All right, Mark Moss is, of course, the host of the Mark Moss Show, and he's a seasoned Bitcoin macro-focused investor with over 25 years of experience. You could sure hear it there, my friend. I appreciate this, Mark. I know that you're going to be up in Vancouver for a conference in January, so we'll have you on, and we'll compare notes. We'll see how this was all called out.
Let's do it.
All right, man. Appreciate it. Thanks so much for your time. Thank you. I'm Jeremy Szafron for all of us here at Kitco News. Thank you for watching. We're keeping a close eye on the market, so stay tuned. Hit the subscribe button. We'll see you next time.